The stock market has become driven by artificial intelligence. Chase Wilsey, the VP of Wilsey Asset Management, is here to explain. Oh, this is a world that my AI brain just doesn't understand. Chase, good morning.
Good morning.
Okay, thank goodness you're here.
Yes.
What are semiconductors? What are these and how are they involved in our world right now?
Yeah, so semiconductors, another kind of word for them is chips. That's the more maybe common term for it. And you got to look at companies here like NVIDIA is obviously the big one, Intel, AMD. And these chips, these semiconductors, I mean, they go in your cell phone, they go in laptops, they go in desktop computers. I mean, they go in now microwaves. I mean, they pretty much go in anything. Okay. And the big space that has obviously gotten so much attention is, yes, they do go in those data centers to help advance artificial intelligence.
So that's how they're tied to it?
Yes. Big thing is, you know, NVIDIA, what they do, they're now the largest company in the world, gosh, approaching about $6 trillion market cap almost. And they actually are building the semiconductors, designing, not building. Taiwan Semiconductor builds them. NVIDIA designs them. They're designing the chips for your data centers, which is allowing companies like OpenAI, Anthropic, you know, Microsoft, Amazon to really kind of play in that AI space. So
what are you seeing with these semiconductor stocks?
I mean, what has happened with these semiconductor stocks if they've just gone like this?
Yeah.
And I mean, it has been crazy to watch. You know, a company like Micron, they're on the more memory side of things, but again, another semiconductor stock. I mean, you're talking about some of these companies up like 1,000% in a year. I mean, it is insane. And when you look at history, statistics, where we're at, if you look at the semiconductor sector, it has not been this far above its 200-day moving average. And what that is, you just take the average stock price essentially over 200 days, combine them together. That is going to be an indicator, again, that you look for something being what we call as overbought. It has not been that high except for 1995 and 2000. Now, we know in 2000, that was the top for the tech boom. And then after that, the NASDAQ fell about 80%. 1995, a little bit different. The market didn't collapse, but semiconductor stocks did enter a bear market during that time period. The problem that I see now is the market has gotten so heavy into semiconductor stocks. S&P 500 is about 20% in these semiconductors. So I think it's much more likely we could see something like 2000 because the market has become so reliant on AI, so reliant on semiconductors.
So what drives these AI stocks, and if people are looking to get into this, like, are there ones that are more popular, more well-known that they should look into?
I mean, the big thing that's really driving this AI space is the excitement around it. I mean, a lot of the problem that I see is it's really priced for perfection. When you look at AI, it is here. It is going to change the economy. It is going to change productivity. There's no denying that. But when you look back to the .com era, the internet, it definitely changed the way that we viewed the world. But the problem was so many stocks got so overbid, there was so much hype involved that when it almost didn't live up exactly to that perfection that people were pricing in, you again saw that NASDAQ fall 80%. So I tell people right now, just be careful. Understand that valuations are extremely stretched in that sector. And historically, when things get this expensive, the next 5-10 years don't look as good as the previous 5 to 10 years in that space.
All right, speaking of the market, last week S&P hit some record highs, but some stocks hit record lows. So what is, excuse me, what is this telling you?
Yeah, this is another warning sign of, again, overvaluation in the market and really concentration, I'll say. So what we're looking at here is historically when the market's hitting new highs, you want to see a good breadth or a lot of stocks hitting highs. Really go back to 1996, the only other period of time that we've seen less than 60% of stocks above their 50 and 200-day moving averages was 1998 to 2000. So again, that tech boom. So there's a lot of similarities now that I'm seeing in that data with the tech boom, and I do worry that a bust may not be right around the corner, but as things get more and more expensive, I do get more and more concerned that we could see a major drawdown, again, because of the valuations and a lot of the similarities that I'm seeing to the .com bubble.
We will see. Chase Wilsey, we appreciate your time. Thank you.
Thanks for having me.